Hello and welcome to the Business Standards Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day.
रामू दो चाय दे यार।
अरे नहीं यार, एक चाय कॉफी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का home loan? I agree with you.
SBI is the banker to every Indian.
On his first visit to India, Japanese Prime Minister Fumio Kishida pledged an investment of $42 billion over the next 5 years. Now, this fresh tranche follows the over $29 billion investment made by Tokyo in India between 2014 and 2019. So, what are the specifics of this fresh investment? Where will this money go? And how does Japan match up to China when it comes to infra investments? Let us find out.
When the Prime Ministers of India and Japan met in Delhi last week, the talks veered towards China also. Prime Minister Fumio Kishida was in India to attend the 14th India-Japan Annual Summit held after a gap of 3.5 years. Prime Minister Narendra Modi briefed PM Kishida on the situation at the line of actual control with China, and he also stressed on PLA's attempts at multiple transgressions on the LAC. Foreign Secretary Harsh Shringla, too, said that any normalcy in the India-China relationship will depend on LAC de-escalation. While China's overseas investments have attracted enormous attention, Japan is still the leader when it comes to infrastructure in Southeast Asia. According to Fitch Solutions, as of August 2021, Japan had $259 billion invested in unfinished projects in Malaysia, the Philippines, Indonesia, Thailand, and Vietnam, compared with China's $157 billion. Japan is also playing an increasingly larger role in South Asia, a region where China's influence has grown rapidly. Apart from India, Japan is also focusing on countries like Bangladesh and Nepal. As the Diplomat reported, Japan already enjoys a positive image in Bangladesh thanks to millions of dollars of direct investments. Bangladesh's Mathabari deep sea port is also being developed by a Japanese consortium. As of January 2019, Japan had been the largest donor to Bangladesh, having given almost $1.8 billion in loan support since 2018. Japan is the third largest investor in the Indian economy, with cumulative FDI inflows of $30.27 billion between 2000 and 2019. The country contributed 7.2% to India's total FDI inflows during the same period. Meanwhile, last week's summit is sure to take the India-Japan trade ties to the next level. After the summit, Prime Minister Modi announced that both the countries have set an investment target of 5 trillion yen or about $42 billion in the next 5 years. Both the leaders acknowledged that the investment target of 3.5 trillion Japanese yen announced in 2014 has been achieved. The public and private investment and financing from Japan to India in the next 5 years, which will amount to 5 trillion Japanese yen, will be used to finance both public and private projects of mutual interest. The new target follows and exceeds the 3.5 trillion yen in investments and financing that then Japanese Prime Minister Shinzo Abe had announced for the 5 years between 2014 and 2019 during his 2014 visit to India.
Prime Minister Shinzo Abe, he was supposed to have a strategic financing plan for India, which was meant to counter the absence of India from RCEP and create new supply chains through new investments in India, including in the digital sphere. So therefore, that plan is more robustly being implemented now. So this plan is now, you can say, a strategic financing plan for India as a quad partner and a strategic partner of Japan. Well, much of it will go into infrastructure. That is the public part. The private part, much will go again into automobiles and auto components, into food processing, into medical devices, into electronics. You are going to look at strategic sectors of electronics, which may also include semiconductors. And you can already see Maruti has signed off 10,400 crores in electric vehicles. All this is also part of the clean technology partnership. Now, Japanese companies want to bring investments into the digital sphere for Digital India. and already about $10 billion in venture capital has come from Japan. And this is going to increase even more. In the joint statement between India and Japan, there is no mention of a China plus one policy. But this is clearly a China plus one policy being implemented with great gusto.
The agreements and MOUs signed during the 14th India-Japan Annual Summit include 7 JICA loans amounting to 20,400 crore rupees. These are meant for projects in connectivity, water supply and sewerage, healthcare, horticulture and biodiversity conservation across various states in India. JICA, or Japan International Cooperation Agency, is involved in at least 27 recent and ongoing activities in India. These projects stretch across sectors such as health and medical care, transportation, power and energy, urban environment management, and agricultural and rural development, among others. In particular, the transportation projects include Phase 2 of the Delhi Mass Rapid Transport System project, Hyderabad Outer Ring Road project, Visakhapatnam Port Expansion project, and Dedicated Freight Corridor project. On March 16th, a financial daily reported that JICA expects to fund $3 billion worth of projects in India in 2022-23. JICA is also financing other big infrastructure projects such as the Mumbai-Ahmedabad High-Speed Rail and the Mumbai Trans-Harbour Link. Other announcements during the summit included the Clean Energy Partnership and the Sustainable Development Initiative for the Northeastern region of India. Japan's new investment target reaffirms the special strategic partnership between India and Japan. The latest meeting between the Prime Ministers of the two countries marks another step towards deepening regional cooperation amid an increasingly assertive China.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the Japanese investment in the country, let us now move on to investments in the private equity space. Amit Chandra, chairperson of US PE firm Bain Capital in India and head of CII Committee on Private Equity and Venture Capital, believes that the government can help build on Atmanirbhar and vibrant domestic private equity industry. In an interview with Business Standard Surajit Dasgupta, Chandra shares his thoughts on the need of a policy framework for private equities on the line of the PLI framework, their opportunities in India, and more. Let us listen in.
This time in the budget, the government has acknowledged very clearly the importance of the whole private equity space. What is the change that you've seen in the last 2 years in terms of the behavior of FDI flows?
If you go back a few years ago, we used to get $20-30 billion a year of PE and VC inflows. Last year, that number touched $50 billion. And it's happened basically because foreign direct strategic investors have become very insular globally. But PE and VC investors have actually replaced them. The second important factor is that PE and VC now actually dwarfs FII inflows. It not just dwarfs FII inflows, but it's actually also very stable. So FII inflows are very volatile. I think the government very wisely is realizing that this is a category of investors that is long-term in nature, stable, and increasing its allocation to India. It does not mean that the conditions for it are perfect. There are still obviously issues. Those issues often come into the public domain. And also, it doesn't mean that just because we get $50 billion, it doesn't mean that we can't get $75 billion. I think we should aspire for taking PE and VC both inflows to a next level and also creating a PE and VC community locally the Atmanirbhar Bharat version of it locally. Our submission to the government has been that as you set up this high-level committee, it's of course important to focus on whatever pain points have been coming up.
Said that strategic investors are getting insular. So one is, why is that happening? And you're talking about a local, something like a PLI scheme, having an Atmanirbhar strong community of local PE investors. What is the situation today on the ground?
Post the global financial crisis, a lot of strategics felt like there were issues in their home markets. And so, rightly so, they first fortified their home market positions. I think in some cases, a lot of global strategics took support from home countries. Let's not forget that a lot of sovereigns raised the barrier a little bit for cross-border investments. A lot of countries also have made investments from certain sovereigns difficult, right? Now, I think all of this has, of course, had its impact, on cross-border flows in general. Let me address the second point that you raised. The domestic institutional investor, which is largely the domestic mutual fund, is actually critical to the markets. And the domestic institutional investor comes in via two forms: the insurance companies and the domestic mutual funds, all of them powered by the domestic equity investor. Fortunately for us, so much wealth which has got created in the last 10 years has actually been shared with domestics via this category of institutions, right? Today, as a consequence of that, when we have had sell-offs for extraneous reasons, they've actually been cushioned by domestic institutions. So we have a much, much more mature market. Now, the question is, what is the policy framework we want to create? Is the question that comes up to do this. So in my mind, I think these are questions which a high-level committee must look at. What is it that we do to build a vibrant domestic private equity and venture capital industry? This is a very important question we must answer. So while we solve the short-term problems that the private equity industry, which is today largely foreign, while we answer those questions, I think we must not forget that there's an opportunity to think about what the long-term roadmap is.
But how do you do that? What are the one or two things that the policy would require?
What I'm saying is that a learned committee can look into all the issues. There are issues on taxation. We should look at our framework that exists in each regulator, IRDA, so that it becomes easier for insurance companies to invest, because insurers are big investors in private equity in the West. Today, the industry, whether it is domestic or foreign, has not played a big role in funding MSMEs. Okay, MSMEs contribute disproportionately to the nation's development and particularly employment. What we should do, and again, the high-level committee can look at this, is what incentives can come up to encourage PE and VC to invest in MSMEs.
If you look at the PLI scheme, there is a global part, there's a domestic part in all the various things. If you're going to look at a similar model, one would also, from a government's perspective, look at how they create funds which are specific to India. Do you see that also happening when you talk about Atmanirbhar Bharat?
I don't think most global firms will start India-specific funds. I don't think so. The model for global firms, I think generally they don't like country funds. And this is not true about just India. I think it's true in most places. It's just that a continent specific fund just gives you diversification. And what happens is sometimes countries go through ups and downs. For example, a country can go through a period where markets are very rich, and what a continent fund can give you is the ability to just wait.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, global IT consulting firm Accenture reported strong Q2 results last week, outwitting experts and its own expectations. The company's commentary reinforced analysts' view that the demand environment continues to remain strong and it's sustainable in the long run. However, supply-side challenges remain a point of concern. Our next report takes a dive into what the numbers mean for the Indian IT sector. IT consulting major Accenture recently announced its second quarter results for fiscal 2022, beating Wall Street estimates. The Dublin-based company reported revenue income of $15 billion, registering a growth of 24% year-on-year in dollar terms and 28% in local currency. It also saw record order inflow of $19.6 billion, rising 26% year-on-year in local currency. However, what surprised the markets was Accenture's sharp upward revision in revenue guidance. The company now expects revenue growth in the range of 24 to 26% in local currency for FY22, which is up from 19 to 22% pegged last quarter. It had pegged revenue growth in the range of 12 to 15% at the start of the fiscal. Analysts say Accenture's strong revenue growth led by broad-based demand driven by accelerated cloud and digital transformation is a positive for Indian IT. The increase in FY22 growth guidance despite uncertainty from the Russia-Ukraine conflict further pins hopes of robust order pipeline. Motilal Oswal Financial Services highlights that Accenture's positive commentary indicates a healthy pipeline and strong spends in areas of digital, cloud, Web 3.0 and security. Only 30% of workload is on cloud and thus acceleration of cloud adoption will open further opportunities for IT companies and provide a sustained demand environment. It also said, given Accenture's tendency of increasing guidance over the quarters, its Indian IT services peers would be closely watched for their commentaries on FY23 as expectations on growth escalate. That said, not all is well for the Indian IT companies. According to D Street Mavens, even though Accenture's numbers look impressive, they highlight pain for its Indian counterparts. For instance, Accenture has been clocking record order wins in large size segment while Indian IT companies are focusing on mid and small order sizes. The company has also seen accelerated market share gains in FY20 to FY22 compared to TCS and Infosys, and has been talking about 3 times industry growth in recent days versus 2 times in the past. To be sure, Accenture does benefit from strong capabilities across digital areas in consulting and outsourcing, which are preferred by enterprises undertaking digital transformation programs. But this has aided the company in outperforming Tier 1 Indian IT companies.
We believe Accenture benefits from strong capabilities across digital areas. With a large presence in cloud, where at $18 billion in terms of revenues, they're larger than the overall revenues of a lot of tier 1 Indian IT companies. They have strong presence in cybersecurity, SaaS, as well as Industry X. In addition, they combine both consulting and outsourcing capabilities, which are preferred by enterprises undertaking digital transformation programs. Accenture's materially larger digital practice with 70% plus of revenues coming from it and has been ahead of competition in terms of identifying areas of investments. We believe Accenture's results might have some positive rub-off for Indian IT, but nuances like Accenture's stronger portfolio, consistent outperformance versus Tier 1 IT, deal win strength relative to Tier 1 Indian IT companies, and differentials on growth against companies like Infosys and TCS, which are materially smaller, limit material extrapolation of strong Accenture results to Indian IT. We believe Tier 1 IT might have peaked on growth in 3Q. We expect normalization ahead to more like pre-COVID growth rates by FY24. Weakening macro, savings in captive or asset takeover deals, and weaker large deal momentum will be drags in our view.
The second red flag for the Indian IT companies comes in terms of margin guidance. Accenture has lowered FY22 EBIT margin improvement guidance to 10 basis points for the fiscal, which suggests elevated supply pressures. Given this, GM Financial says there are potential risks to margins from likely rebound in travel expenses in H1 FY23 itself and elevated supply side pressures exacerbated further by the recent Ukraine crisis. Ambit Capital expects growth of Tier 1 IT companies to moderate from 17.7% year-on-year in constant currency in FY22 to 11.7% and 8.1% in FY23 and FY24. The third headwind for Indian IT emerges from outsourcing income, which accounts for a very large part of Accenture's revenue. Indian players like TCS, Cognizant Technology Solutions, Infosys, Wipro, HCL Technologies, and Tech Mahindra are in direct competition for the same. Against this backdrop, IT shares pared their gains and ended lower on Monday, with the Nifty IT index dipping nearly 2% from the day's high and closing 0.7% down. Let's go to Business Standard's Abdul Bhakar to see if these headwinds are showing any downside pressure on technical charts.
The overall trend for the IT stocks hasn't been so great recently. Although Nifty IT index managed to hold on the 200 DMA support, which even the benchmark indices Nifty 50 and Sensex failed to do so in the recent correction, the trend for the IT index and the IT stocks hasn't been so thrilling. Stocks like Infosys is doing pretty well at this moment. It is showing a gradual upside in recent days, and it can rise towards 2000 levels as long as it trades above 1800, which is its support mark. Stock like TCS, it needs to sustain above the resistance of 3700, and when it does that, it can rise towards the next resistance of 3900. When it comes to stock like Wipro, which is also showing a gradual upside, now the stock has come to a resistance of 200 DMA placed at 617, and if it manages to conquer and sustain above 617, it can give further upside and can reach to 640 as well.
Net Accenture results present a mixed picture for the Indian IT players, with visibility of a sustainable demand, but margin pressure and market share headwinds looming large. On Tuesday, global cues and stock-specific action will sway the indices amid lack of domestic events.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Markets, it seems, have priced in the negative sentiments, including the ongoing war next door. It had anticipated the damage and is now trying to cope with it. Meanwhile, Ukraine too is trying to cope with the loss of civilian lives due to Russian airstrikes. Its repeated pleas to the Western nations to enforce a no-fly zone have not yielded any result. West fears that its implementation may escalate the war. But what exactly is a no-fly zone and why is it needed? Watch our next report to find out. Ukrainian President Volodymyr Zelensky virtually addressed the United States Congress last week and asked the US to enforce a no-fly zone over his country. He has made similar such requests since the beginning of the Russian invasion, only to be turned down every time. Zelensky has also slammed NATO for not implementing a no-fly zone over Ukraine. NATO countries, on their part, have warned that such a move could spark a widespread war in Europe with Russia, which is a nuclear power. So, what exactly is a no-fly zone and why is it risky to implement one over Ukraine? Let's find out. First, let us understand why Ukraine wants the US and NATO to enforce a no-fly zone over its skies. Its president Volodymyr Zelensky has said that Russian forces have turned the Ukrainian sky into a source of death for thousands. According to Zelensky, Russia has fired nearly 1,000 missiles and dropped countless bombs in Ukraine. The purpose of the no-fly zone is to protect the civilians of a country or region from attacks conducted by combat aircraft. Another purpose could be to prevent one of the combatant countries from achieving air superiority, which means control of the sky over the battlefield. They have also been used in attempts to limit an ongoing conflict to just fighting on the ground. Put simply, a no-fly zone is established when one or more parties prohibits either all or certain types of aircraft from flying through a designated airspace over a country or region. And such a zone requires that the parties concerned be willing to enforce it. Effective enforcement of a no-fly zone requires threat of military action if the target country violates the zone and sends aircraft of the prohibited type into this area. Put simply, if the US declares a no-fly zone over Ukraine, specifically prohibiting Russian aircraft from entering the designated airspace, then the US will have to be ready and able to shoot down any Russian aircraft violating the space. American or NATO combat aircraft shooting down Russian aircraft could spark a wider conflict between the two sides, which might lead to an escalating military conflict between nuclear-armed adversaries. No-fly zones have been implemented on several occasions. From 1991 to 2003, the US, Britain and France had enforced no-fly zones over Iraq to protect Shia populations and minority Kurds from air attacks by Saddam Hussein's government. From 1993 to 1995, NATO enforced a UN-declared no-fly zone over Bosnia. In 2011, NATO again enforced a UN-approved no-fly zone over Libya during the civil war in that country.
यार आइसक्रीम खाएं? नहीं यार, कुल्फी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
अरे SBI contactless debit card? I agree.
SBI is the banker to every Indian.
In April of 1994, 2 US jets have mistakenly shot down 2 US Army helicopters in a no-fly zone over Iraq, leaving at least 26 dead, including 15 Americans. That's all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.